Hi guys, welcome to Unisys weekly fundamental analysis. So first of all, as usual, we'll look into the USD. So the US dollar index excuse me, fell sharp, fell slightly. Vaccines increased the market risk appetite, and the US dollar was further bearish by investors. So against the background that vaccines have raised the market risk sentiment, the US dollar is further bearish by investors. The new round of strong easing measures to be released in the Fed's policy resolution next week has also attracted attention in advance, under the background that the market's cautious sentiment is expected to continue to firm before the weekend. The US index will encounter challenges again within last week's low of 90.47 days. So after the fall of the 90 round mark, it will face a life and death test. So in addition, the epidemic continues to spread in Europe and the US. Last week, the number of initial jobless claims in the US jumped to a nearly 3-month high due to the continuous increase in the new confirmed case of COVID-19. More companies has been restricted. This further proves that the epidemic and the lack of additional fiscal stimulus is hurting the US economy. On the other hand, the US Food and Drug Administration FDA's external advisory panel voted an overwhelming 17 to 4 vote on Thursday for the emergency use of Pfizer or BioNTech COVID-19 vaccine, paving the way for the agency to authorize the national vaccination. It is expected that the US will begin distributing vaccines nationwide in the coming weeks and months. Pfizer said on Thursday that it plans to submit an application before April next year in order to obtain the full US approval for its experimental COVID-19 vaccine. However, the US index is not far from the low of 90.471 recorded last week in more than 2.5 years. The Pfizer biotech vaccine has previously been approved for use in the UK, Bahrain, and Canada, and the UK has begun mass vaccination. So investors expect that with the large-scale vaccination of the COVID-19 vaccine, the dollar's safe haven demand may be weakened. And next, we'll look into the pound. So the European Commission President von der Leyen stated at the EU summit that Britain's no-deal Brexit is the most likely outcome. Besides, British Prime Minister Johnson also stated that the UK is very likely to leave the European Union without a deal and said that now is the time for companies and individuals to prepare for the no-deal Brexit. The pound plummeted nearly 1%, hitting a new low of 1.3162 since 30th of November. And lastly, the 2020 has entered the final stage, and investors are beginning to pay attention to the trading opportunities in 2021. This article counts the market judgments and trading opportunities recommendations of one of the world's famous investment banks since November, which is Goldman Sachs. So Goldman Sachs stated that the bull market of commodities is expected in 2021 and maintains the overweight recommendation. And Goldman Sachs believes that the price of the gold is expected to rise to US 2003 per ounce. In 2021, the price of Brent oil is expected to rise to $65 per ounce, and iron ore is expected to continue the bull market in 2021. In addition, the S&P 500 index is expected to rise to 4,300 points and is recommended to do more Canadian dollars and Australian dollars. Goldman Sachs Group main global investment theme in 2021 is to bet on the steepening of the US Treasury yield curve. They also say that due to the strong economic recovery, emerging markets will have outstanding performance in the next year. Optimistic about the Mexican peso, South African rand, and Indonesian rupiah against the USD. So in the upcoming, will be the forex calendar for the upcoming weeks. So traders, you have to be aware, and you may take a screenshot as a reference to avoid trading, or you have to set your stop loss as it will be fluctuate and volatile. So that's all for today. Thanks for watching.